All right, Wall Street is in for a hectic week ahead as some of the market's most heavily weighted companies are set to report earnings in the coming days. Wow, this is going to be a big week. We'll get reports from Microsoft, Alphabet, Meta, Apple, and Amazon, which are set to be weighed down by the soaring U.S. dollar and, of course, many other things, just not the dollar. You look at a company like Alphabet with that YouTube division, curious on what they say about ad demand off of that disastrous quarter from Snap. We previewed Apple's earnings on Friday. They will be impacted by the stronger dollar. How are they doing in the key market of China? If Tesla's out here lowering prices in China, what has Apple had to do in the country? So the way it is teed up now, I would argue Amazon is teed up probably to have the best quarter. We've seen consumer spending hang in there. We've seen a lot of parts of business that Amazon plays in, of course, doing pretty well. They might have the quarter to surprise everyone. For me, three things really stick out in this quarter and what we're going to be expecting to hear, as well as what they're going to be signaling going forward. It's FX headwinds. That's not going to abate anytime soon. There's also this major conversation of cloud and whether spending from companies is actually decelerating as they're looking for areas to restructure costs right now. And then lastly, it is the consumer. When you think about Apple and the consumer technology, all of these companies, really, whether it's Apple, whether it's Alphabet, whether it is Meta, and all of the different companies that are so reliant on consumers continuing to put some of those products in their homes. And how could I forget Amazon? So with all of this in mind, what they're signaling towards the holiday season and what that actual discretionary spending may look like on a profile of a consumer that, yeah, even if the household balance sheet might not be totally rocked or it's still healthy, as we were hearing from some of the banks that reported earnings, does that actually still signal a consumer that's going to go out and spend willy-nilly and just almost in a free capacity? I don't believe that's going to be the case. And so it's really going to be that forecast of what the consumer discretionary spending for some of these major tech companies looks like. But FX and cloud, that particularly is what I've got my eyes on. And the market doesn't believe her either, too, Brad. I would add this. If I have to hedge, what I just said on Amazon, FedEx, a month and a half ago, we have continued to talk about this big warning. What is that FedEx, or what did that say about Amazon? Of course, Amazon is using its own logistics network, in many cases, to ship its own products. Are they, in fact, seeing a slowdown in some parts of its business? If FedEx is warning, maybe there might be a read-through on some capacity to Amazon. There was a really interesting stat, actually. A friend Kevin Kelly tweeted out this morning. The 5 biggest companies by revenue are mired in profit slump. EPS projected to fall, get this, 22%, steepest drop in the last 3 years. And that's coming into this week's earnings where you've got Microsoft, Alphabet, of course, Apple and Amazon later on this week, too.